According to Kaspa Daily, short-term liquidity is getting thinner near $0.084, which could open the door for sharper downside moves if sell pressure picks up. On the other hand, there's a noticeable wall of liquidity stacked between $0.087 a potential magnet for price, but also a likely resistance zone if bulls try to push higher. Total open interest might be down 2.5%, but traders on Binance and MEX clearly didn't get the memo. Open interest jumped 6.3% on Binance and 7.8% on MEXI, showing traders are actively opening new positions while others de-risk. With positive funding rates on both exchanges, so longs are still in control, and many are betting on a bounce. While the broader market cools off, these platforms are showing signs of renewed risk-taking, could be retail chasing a move, or just local confidence coming back. What's up, crypto fam? Right now, as I'm recording this on August 4th, Kaspa is sitting on a knife's edge at $0.086, and what happens in the next few hours could determine whether we see a recovery rally or a devastating plunge to 7 cents. The bears are circling, the bulls are nowhere to be found, and frankly, this looks scary. But before you panic sell or FOMO buy, you need to see what I discovered in the charts that nobody else is talking about. Let's get straight to the point. Kaspa has been absolutely crushed over the past week. We're talking about a token that was flying high at $0.122 just days ago, and now it's desperately clinging to the $0.085 level like its life depends on it. And honestly, it kind of does. Here's what's got me concerned and why every Kaspa holder needs to pay attention right now. After losing that crucial upward trend line on July 28th and 29th, KAS hasn't been able to mount any meaningful recovery. We're seeing classic signs of institutional selling pressure, retail capitulation, and what technical analysts call distribution phase behavior. The current price action is painting a picture that's making even the most bullish Kaspa advocates nervous. We're down 0.99% in the last 24 hours, which might not sound like much, but when you're already sitting on critical support, every percentage point matters. But here's where it gets interesting. And this is something I predicted yesterday that's playing out exactly as expected. I told my subscribers that the $0.082 to $0.085 demand zone was going to be the battleground, and right now, we're seeing that prediction play out in real time. The cryptocurrency market psychology is fascinating right now. Bitcoin dominance is affecting altcoins, DeFi tokens are struggling, and proof-of-work mining coins like Kaspa are facing additional pressure from energy concerns and regulatory uncertainty. But sometimes, the darkest hour comes right before the dawn. Now let me show you what's really happening under the hood, because the technical indicators are telling a story that most traders are completely missing. When I pull up the 4-hour time frame, what I'm seeing is absolutely crucial for understanding Kaspa's next move. The current price of $0.085 isn't just some random number. It's sitting right in the middle of what I call the decision zone. The RSI at 46.82 is telling us we're in neutral territory, but here's the kicker. It's been declining from overbought levels, which typically indicates continued selling pressure. However, and this is important, we're approaching oversold conditions where smart money often starts accumulating. Here's where things get really interesting. The MACD is showing an early bullish signal that most analysts are overlooking. While the price has been making lower lows, the MACD histogram is showing signs of positive divergence. This could be the first hint that institutional buyers are starting to step in at these discounted levels. But don't get too excited yet, because the ADX at 18.25 is screaming weak trend. This means we don't have strong momentum in either direction, which often leads to explosive moves once the consolidation breaks. What's really concerning me right now is the volume profile. We're seeing light volume, which in a downtrend typically means one of two things. Either we're about to see capitulation selling that drives the price much lower, or we're in the accumulation phase where smart money is quietly building positions. The CCI at minus 140.23 puts us in oversold territory, which historically has been a good buying opportunity for Kaspa. But here's the catch. Oversold doesn't mean we can't get more oversold. I've seen altcoins drop another 30 to 50% even after reaching technically oversold levels. This is the level that's been absolutely crushing every recovery attempt. Every time KAS tries to break above 9 cents, sellers immediately step in. This tells me there's significant supply waiting at higher levels, likely from investors who bought near the recent highs and are looking to break even. The $0.082, $0.085 range isn't just support, it's the support. If this breaks, And I mean, if we get a decisive close below $0.082 with volume, then we're looking at a potential cascade down to $0.077 and possibly even 7 cents. But here's what's keeping me cautiously optimistic. This support zone has held multiple tests over the past few days. Each time we've touched it, we've seen at least a small bounce. That's the behavior of institutional buying interest. Alright, now let's talk about what this all means for your portfolio and what I'm seeing as the most likely scenarios playing out over the next few days and weeks. If Kaspa can somehow muscle its way above that 9 cents resistance level with conviction, and I'm talking about a close above 9 cents with at least 50% above average volume, then we could see a quick move to $0.095 and potentially even test the 10-cent psychological level. This scenario would likely be triggered by either a broader crypto market recovery, positive news about Kaspa's technology adoption, or simply short covering from traders who've been betting against KAS at these levels. The technical setup for this scenario would require the RSI to break above 55, the MACD to cross positive, and most importantly, we'd need to see volume expansion. Without volume, any move higher would just be a dead cat bounce. This is actually what I think is most likely in the short term. Kaspa continues to chop between $0.082 and 9 cents, frustrating both bulls and bears while slowly building a base for the next significant move. In this scenario, we'd see continued light volume, neutral RSI readings, and basically a market that's waiting for external catalysts. This could last anywhere from a few days to several weeks, depending on broader market conditions and any Kaspa-specific news. For traders, this would be the most frustrating scenario because there's no clear directional bias. For long-term investors, it might actually be the best scenario because it would allow for accumulation at reasonable prices. Here's what everyone's afraid of, and honestly what the technicals are slightly favoring right now. If that $0.082 support breaks with volume, we could see a quick flush down to $0.077, and if selling pressure continues, even 7 cents comes into play. This scenario would likely be accompanied by broader crypto market weakness, continued DeFi sector rotation, or specific negative news about proof-of-work tokens. The technical signals supporting this scenario include the broken uptrend, weak momentum indicators, and the overall altcoin market struggling against Bitcoin dominance. What I'm watching for: volume expansion. Any significant move in either direction needs to be confirmed by volume. Without it, I'm treating any breakout or breakdown as suspect. Like it or not, altcoins like Kaspa are still heavily correlated with Bitcoin. If BTC starts showing weakness, KAS will likely follow. The 8 cents level, this is my ultimate line in the sand. A decisive break below 8 cents would make me significantly more bearish on the short-term outlook. RSI divergences. I'm watching for any bullish divergences between price and RSI that might signal a reversal. My personal strategy: look, I'm not giving financial advice here, but I'll tell you what I'm doing. I'm watching this $0. 0.82, $0.085 support zone like a hawk. If we get a bounce from here with volume, I might consider a small long position with a tight stop below $0.082. If we break down from here, I'm waiting for the $0.077 level to potentially start scaling in, assuming the broader crypto market isn't completely falling apart. Risk management is everything. Whatever you decide to do, please use proper risk management. This is a volatile altcoin in an uncertain market environment. Don't risk more than you can afford to lose, and always have a plan for both upside and downside scenarios. The cryptocurrency market can be incredibly rewarding, but it can also be absolutely brutal to those who don't respect the risks involved. Position sizing and risk management will determine your long-term success far more than being right about any single trade. So, there you have it. Kaspa is at a critical juncture, and the next few days could determine the short-term direction for this promising proof-of-work project. The technicals are mixed, the market sentiment is cautious, and frankly, it could go either way from here. What I want you to remember is that in volatile markets like crypto, the best opportunities often come when everyone else is scared. But that doesn't mean you should be reckless. It means you should be prepared. If you found this analysis helpful, smash that like button, subscribe for daily crypto market updates, and hit the notification bell so you don't miss any of my urgent market alerts. I'll be watching these levels closely, and will update you immediately if anything significant changes. Drop a comment below and let me know. Are you bullish or bearish on Kaspa at these levels? And what other altcoins would you like me to analyze next? Until next time, trade safe, manage your risk, and remember, in crypto, the trend is your friend until it's not. Important disclaimer. This content is for educational and informational purposes only and should not be considered financial advice. Cryptocurrency investments are extremely volatile and carry significant risk of loss. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial professionals before making investment decisions. The author may hold positions in the cryptocurrencies discussed. Never invest more than you can afford to lose, and be aware that you could lose your entire investment. Cryptocurrency markets operate 24/7 and can be subject to extreme volatility, regulatory changes, and technical risks. This analysis is based on current market conditions and technical indicators, which can change rapidly.